Welcome to My Still Commodity Flux, the podcast where we track the trends, turns, and turbulence shaping global commodity markets. This is Nikki Fu, Commercial Director at MySteel Global, in charge of new business sector's growth strategy. Last week was a volatile one for energy markets. Early in the week, both crude and LPG prices came under downside pressure. Later on, concerns over Middle East supply risks moved back into focus as tensions between the US and Iran persisted, while reports of Iranian strikes in Kuwait added another layer of uncertainty. That helped oil prices recover some of their earlier losses, and LPG markets followed a similar path. Even so, both crude and LPG still posted lower weekly averages compared with the previous week. So, what was driving the market beneath the headlines, and why did the rebound fail to change the broader price picture? Joining me today is Ibo, lead LPG analyst at MySteel Oilchem. Ibo, thanks for being here.
Thank you, Nikki. It's great to be here.
Let's start with the broader picture. Looking back at last week, crude oil prices moved quite sharply, first declining and then rebounding on renewed Middle East tensions. However, China's LPG market did not fully follow this crude oil pattern. What explains this divergence between crude and LPG?
That's right. And this divergence was one of the key features of the market last week. Crude oil prices initially came under downside pressure as geopolitical concerns temporarily eased, before rebounding later as risks in the Middle East resurfaced. This helped lift sentiment across energy markets and supported international LPG prices later in the week. However, China's domestic LPG pricing was much more driven by local fundamentals rather than crude oil alone. As a result, China's LPG market did not move in parallel with crude oil. In the physical market, China's domestic LPG prices were generally weak and range-bound over the week. Residential LPG and esterified C4 both saw average price declines, reflecting sluggish fundamentals and limited demand support.
Could you break down how China's domestic market actually performed in more detail, especially in terms of regional spot prices?
In the spot market, we saw clear regional divergence. In South China, prices declined more noticeably, mainly due to inflows of northern cargoes, which intensified local oversupply pressure. In contrast, Shandong showed relatively stronger performance, supported by crude-related sentiment and relatively stable downstream essential demand, which led to intermittent rebounds after earlier declines. Esterified C4 followed a slightly different pattern. It weakened at the beginning of the week due to bearish sentiment, but later recovered as downstream buyers re-entered the market at lower price levels. This was also supported by several unit restarts and a modest improvement in chemical demand expectations.
So how would you summarize overall market performance last week?
In summary, LPG fundamentals remained relatively sluggish. China's domestic LPG and downstream products, including alkylation and MTBE, saw temporary price increases during the week, but average prices still declined. Propane experienced the largest price correction, driven by weaker demand conditions. So the international crude oil market provided short-term sentiment support, but China's domestic LPG pricing was primarily driven by weak fundamentals and regional supply-demand imbalances.
Let's move to the supply side. What developments stood out during the week?
Supply availability increased from multiple sources. China's domestic refinery output rose slightly as some facilities resumed operations, and several producers increased market sales volumes. At the same time, import arrivals increased significantly compared with the previous week. This provided additional supply to coastal markets, particularly in eastern and southern China. As a result, overall market availability improved, contributing to a relatively ample supply condition. However, it's important to emphasize that the market was not oversupplied. Supply condition shows signs of recovery, while inventories and market flows remain generally manageable.
And how did demand perform during the week?
Demand showed mixed signals. Residential consumption remains in the off-peak season. As temperatures continue to rise across China, demand for LPG as a cooking and heating fuel naturally softens. On the chemical side, however, fundamentals were somewhat more encouraging. PDH operating rates increased during the week, supported by new capacity ramp-ups and higher utilization rate. Several additional PDH units are expected to raise operating rates or restart in the coming weeks. At the same time, some downstream sectors, including alkylation and MTBE, experienced temporary declines in operating rates due to maintenance activities. In summary, chemical demand was gradually improving, but the recovery remained moderate.
IBO inventory trends also appeared somewhat mixed. What should listeners take away from those numbers?
We saw two different trends. Refinery inventories declined during the week, reflecting improved transaction volume and a recovery in spot trading following earlier price declines. Meanwhile, port inventories increased as import arrivals exceeded the pace of demand growth. This tells us that China's domestic circulation remained relatively stable, while imported supply continued to accumulate at coastal terminals. Going forward, port inventory trends will remain an important indicator of the supply-demand imbalances, and import arrivals are expected to stay elevated in the near term.
All right, and how did downstream profitability evolve over the week, and what factors were driving the changes?
There were some improvements, although profitability remains uneven across the value chain. PDH margins stayed negative, but losses narrowed as feedstock costs declined. The alkylation sector performed relatively better. Lower feedstock costs combined with stronger alkylate prices helped margins return to positive territory. That said, many downstream sectors are still facing profitability challenges, which is one reason why purchasing behavior remains relatively cautious.
Finally, what are the key themes market participants should watch in the coming week?
There are three main factors worth monitoring. First, international crude oil prices are expected to face downside risks, and a weaker macroeconomic and geopolitical backdrop may turn into a bearish driver for overall market sentiment. Second, import arrivals and import volumes are both expected to increase, pointing to a more ample supply outlook. Third, fuel demand for heating and cooking is likely to remain subdued, while chemical consumption could see some improvement with higher operating rates at PDH and downstream units. In summary, we expect China's LPG prices to remain relatively stable. Some regional markets may see modest price increases, particularly where chemical demand improves. However, without a stronger acceleration in overall demand, sustained upward momentum may remain limited.
Thank you, Ibo, for sharing your insights. And thank you to our listeners for joining us today. If you'd like to follow these developments in more details, the full analysis and data behind today's discussion are available through MySteel Oilchem's latest China LPG Market Weekly Report. For more information, please visit mysteel.net or contact us at inquiries@mysteel.com. Thanks for listening to MySteel Commodity Flux. If you found today's episode helpful, be sure to subscribe for more analysis on global commodity markets. Until next time, keep tracking the flows.